to Mark Gibson Chumawi's channel. Accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
And good afternoon, class, and welcome to your Advanced Financial Accounting and Reporting Review class. No? So today we'll cover consolidation, intercompany sale of fixed assets. No? So this is actually part 4 of business combination. No? So parts 1 covered the business combination, stock acquisition, the date of acquisition. No? And then part 2 covers the um, consolidation subsequent to the date of acquisition, and then part 3, it's the consolidation intercompany sale of inventory. Today we'll cover consolidation intercompany sale of fixed assets. No? So just as a review, uh, of course there's a relationship between a parent and subsidiary. Sagit lang pala, na-off ko yung camera at kumukumpas-kumpas ako dito nang hindi ko naman nakikita yung hi, start sharing. Ayun. O sige, 'di ba, in business consolidation, sabi natin there's parent and subsidiary. Basically, si parent holds ownership and control over the subsidiary, no? So si parent, it should be 50% or more, no? So to demonstrate control, no? So in the books of course, si parent will still have its own separate financial statement, and also si subsidiary kasi hindi naman siya 100% owned, no? So subsidiary will also have its own um, financial statement. But right now, we have to consolidate it, no? Kasi nga we should see this just as one legal entity, for the reason being that that the parent owns majority of the subsidiary stake, no? So for example, if it's 85%, the parent owns 85% of the subsidiary. So there's parent subsidiary relationship. Now we have to, based on the standards, we are now required to prepare a consolidated financial statement. Today's topic will cover intercompany sale of fixed asset. Now, imagine parent and subsidiary. Si parent nagbenta ng fixed asset kay subsidiary. How are we going uh, to account for that sale in the consolidated financial statement? O tandaan class ha, it's the consolidated financial statement. So it's not necessarily parent plus subsidiary is equals consolidated financial statement. No, it's not, it doesn't work like that. There are um, so-called working paper entries or elimination entries that we have to prepare outside of the separate books of the parent and subsidiary, no? So we'll also cover that, no, later on. So the best approach to illustrate intercompany sale of fixed assets is by a discussion problem. So ang gagawin natin is diretso tayo sa discussion problem para at least kita natin how are we going to apply, no, or account, no, for the intercompany sale of fixed asset, no. So isa pa siguro na dapat natin review, no. So the concept of downstream and upstream sale, no. So tandaan na, if it's downstream, this is the parent and this is a subsidiary. The parent is the selling affiliate, no? So downstream sale, it's from the parent pababa papunta kay subsidiary. If it's the upstream sale naman, is the subsidiary is the selling affiliate. So si subsidiary nagbenta kay parent, no? Kailan ulit relevant na malaman kung downstream or upstream yan? Tandaan, if it's downstream, if the parent is the one selling to the subsidiary, all the revenue, realized or unrealized, will only be attributable to the parent, no? Kasi si parent yun eh. Unlike if it's upstream, all the realized and unrealized will have to be split based on proportionate share, no? So in my given example, it's 85-15, no? So 85% goes to the parent, 15% goes to non-controlling interest. So yun. O sige, para lang at least mas malinaw, pag-usapan natin yung treatment naman ng intercompany sale of fixed assets. Um, Una ko muna palagi in solving problems in afar, no, even in management advisory services, look for the requirements first. Kasi there are times na masyado mahaba yung problem and yet konti lang pala hiningi. No? So there are three requirements here. Number one, how much is the consolidated net income for the year and the December 31, 2021? So i-highlight mo na agad. No? This is consolidated net income. Pakitandaan palagi also relevant yung year. No? So not for this problem but in different in some other problems where 2 years are presented. No? Number two, how much is the carrying value of machinery in the consolidated statement of financial position as of December 31, 2021? And then finally, number three, how much is the consolidated depreciation expense for the year ended December 31, 2021? So let me read the problem. Masyado mahaba. I hope it's still clear. No? On January 1, 2021, PJE Incorporated purchased 60% of the outstanding voting shares of Butterfly Corporation for 11 million. O, stop muna tayo dyan. Sino si PJE? PJE is the parent, no? So si PJE binili 60% of the outstanding voting shares of Butterfly Corporation. Sino si Butterfly Corporation? Butterfly Corporation is the subsidiary. How much is the consideration? It's 11 million. Okay. The shareholders' equity of Butterfly Corporation on the date of business combination was composed of 12 million share capital, 1 million share premium, and 3 million retained earnings. So ito naman yung net asset ni Butterfly Corporation. Again, in business combination, we should account for the subsidiaries identifiable net asset at fair market value. Kaya nga yung next sentence, the fair value of the non-controlling interest on this day is 7 million. An examination of Butterfly net assets revealed that book values were equal to the fair market values except for inventory which was overstated by 500,000 and machinery which was understated by 1 million. O sige, pause muna tayo doon. Uh, in this problem, uh, we you can see no that we're going to be able to apply part 1, yung business combination no, at the date of acquisition. So which is good no, at least uh, on the last part of the business combination discussion, I will be able to uh, illustrate again no what we have discussed during the first part no. The inventories of the subsidiary on the date of acquisition were all sold by the end of the calendar year 2021. Again, while this is while the problem provides this statement, which is good, at least we don't have to assume. But the assumption is all the inventories which remain unsold uh, the end of the end of the period. Ang sabi natin diyan, the assumption is those inventories will be sold the following period, no? So ganun palagi assumption on the inventory. Okay? Um, while the machinery has an estimated remaining useful life of 5 years from the date of business combination. So this is relevant in computing for your depreciation expense. Goodwill arising from the business combination was impaired by 150,000 at the end of 2021. So ito, uh, sabi natin, di ba? Goodwill by definition, this is uh, um, intangible assets that's not identifiable, no? So this is just a result of purchasing one business on top of the consideration is greater than the fair value of the net assets, no, identifiable net assets of the subsidiary, no. So the requirement of the standards is that we're not going to amortize goodwill, but we have to test it for impairment on an annual basis. Okay. On July 1, 2021, PJE Incorporated sold its machinery to Butterfly Corporation for 5 million when it had a carrying value of 3 million. The machinery has an estimated remaining useful life of 4 years from the date of intercompany sale. On September 1, 2021, Butterfly Corporation sold a portion of its land with carrying value of 2 million to PJE for a loss of 1 million pesos. No? So, pansinin mo, dito sa third paragraph, meron tayong downstream and at the same time, meron tayong upstream sales. No? So later on, pag-uusapan natin yan. No dividends were declared by the affiliates for 2021. Then separate financial statements of PJE and Butterfly Corporation on December 31, 2021 as follows. So ayan, nandiyan yung balance sheet, nandiyan din yung P&L natin. No? So let's go to problem number 1. Isa-isayin muna natin yung concept. No? Mhm. So problem number 1, una nating pag-usapan ay yung ah, yung goodwill, no? So how are we going to account for the goodwill? O sige. As a review, the non-controlling interest, we have to account for that in two ways, no? So it's either full goodwill method or partial goodwill method, no? So sabi natin, if the problem is silent, we have to use full goodwill method if possible, ha? Tandaan yan, class, ha? Um, because there are instances where gain is recorded, then standard doesn't allow it, no? So paano yun? Illustrate natin, no? Una, how much is the consideration ba? Again, this is one of the templates that I have introduced during part 1 of the session, no? So on January 1, 2021, PJE Incorporated purchased 60%. O yan, 60% pala eh. So that's 11 million, no? So how much ba yung how much yung fair value of net assets ni subsidiary? So sabi diyan meron kang 12 million plus 1 million plus 3 million, no? But at the same time, uh, ano yata ang calculation yan? Ayan. Yan muna. Pag-usapan muna natin yung fair market value, no? So, kinompute ko tong 16 million. Oops. 16 million, yun lang naman yung book value nung uh, uh, share capital, 12 million, 1 million share premium, and then 3 million retained earnings, no? So, book value, so this is the net asset kasi 'di ba asset is equals to liabilities plus equity. So therefore the equity side is your net asset, no? Or kasi yun yung given sa atin. So that's how we are going to compute for the net asset. Now, sabi diyan, the uh, an examination of net assets revealed that book value were equal. So okay naman pala, equal naman pala. Except for, ayan na, inventory daw is overstated. So kung overstated ang inventory natin, so we have to deduct it, no? Of course. Now, machinery which was understated. Kung understated ang machineries, we have to add it back. Okay? So with that, alam na natin kung magkano yung total fair market value, fair value ng net asset ni subsidiary. That's equivalent to 16.5 million. Okay? Ngayon, ito na yung test na kailangan natin gawin. While the 7 million is given, sabi diyan yung fair market value of the non-controlling interest, no? But this is the test that we're going to do. How much is pag sinabi kasi natin, di ba sabi, if the problem is silent, we'll do full value, full goodwill, no? Or the fair value method, no? So pag full goodwill, the goodwill will, um, the goodwill is split between the subsidiary and the parent, no? So, paano yan? How much is the aggregate? 11 million. Yan yung consideration, no? Controlling interest. Now, the total fair market value is 16.5 million. Of course, computing lang natin how much would be the share, no? So, split lang. 16.5, this is the fair value of net asset. 60% goes to the parent or the controlling interest. 6.6 million representing 40% goes to the subsidiary or the non-controlling interest. No? So okay na tayo dyan. Ngayon, we have to test if this is going to be allowed by the standard. Sabi kasi, 7 million represents the fair value of the non-controlling interest. No? If this is 7 million, check natin kung 7 million to, will we get positive? So if this is positive, this is allowed. Kasi there will be times na ito is, sabihin natin, 4 million. If this is 4 million, this is minus 2.6, no? So this is not allowed by the standards, no? So in that case, this 6.6 million will be equal, no? So ganyan yung sinasabi ng standard. But in this case kasi, we've tested this. So 7 million fair market value daw of the non-controlling interest will give us 400,000. So in this case, this is okay, no? This is allowed by the standards. So how are we going to split the uh, goodwill? It's the goodwill is 1.5 million, no? So aggregate of 18 million representing the considerations paid by the parent. Ito yung binayad, no? Uh, this is 60%, no? Consideration paid by PJE, the parent, to Butterfly, no? Uh, plus the controlling interest of 7 million. So that's 18 million compared with the fair value of the net assets. Net asset is 16.5 million. It resulted to goodwill, no? Goodwill of 1.5 million. No? So paano natin na-compute yung 1.5 million? The total aggregate com- composed of the consideration paid by the parent amounting to 11 million plus the non-controlling interest yung 7 million. No? So that's total of 18 million compared to the fair value of the net asset of of Butterfly Corporation, no? So amounting to 16.5. Now, pansinin that the aggregate is more than the fair value of the net asset. So therefore, we have to recognize goodwill, no? So how are we going to split the goodwill using the full goodwill method or yung fair value method nga tinatawag natin? It will be split, no, based on this. No? So 1,100,000 for the controlling interest. This is PJE. And then kay subsidiary naman, kay Butterfly is 400,000. No? So okay na tayo dyan. Pag-usapan ngayon natin yung, okay na tayo sa goodwill. Pag-usapan ngayon natin yung uh, template natin ng consolidated net income. Again, this template was already introduced during part 2, no? So it's the same template, no? Wala pa rin magbabago diyan. Meron lang madadagdag, no? Sa pag-usapan natin muna yung uh, first part, no? So we have net income parent. Net income parent, paano natin na-compute yan? Punta lang natin yung net income ni PJE. So how much is the net income? That's 6 million. Ayun, given. Tignan natin yung net income ni subsidiary. Net income ni subsidiary, that's 2 million. Pero this time, we have to split this based on proportionate share. So 60% kay parent, so that's 2 million multiplied by 60%. And then 800,000 kay non-controlling interest representing 40%. So 2 million multiplied by 40%. Pag-usapan ngayon natin tong amortization of excess. Remember, uh, when we computed the fair value, no? So yung fair value of the net assets, identifiable net assets ni Butterfly, na sinabi ng problem that there is an overstated inventory at saka understatement naman in the machinery, no? So therefore, we have to account also for that, no? So anyway, meron naman tayong pinaka-cheat sheet natin, no? So cheat sheet, ito yung pinaka-guide natin para at least malesen yung uh, amount of time that we use, no, to analyze the problem. So paano 'yan? Meron tayong excess. Sabi natin, inventory. Inventory is overstated. If the inventory is overstated, sabi natin, the expense is also overstated. Okay? Eh, kung merong overstated statement sa expense natin, ergo, the net income is understated. No? So, tandaan na, itong template natin dito, this is already net income. No? So, pag-usapan muna natin, in total na lang tayo. No? So, kung meron tayong overstatement ng inventory, ano ba yung expense that is impacted by the inventory, no? So it's the cost of goods sold, no? So we treat cost of goods sold as an expense, of course, no? So 500,000 overstated, kung overstated ang inventory, overstated din ang expense, no? So okay tayo diyan, ha. Pag-usapan natin yung equipment. Yung ito pala muna baka ma-miss out ulit. Sabi natin 500,000 yung overstatement sa inventory. This is December 31, 2021. Sabi natin, um, yung business combination took place in January 1, 2021. No? So, ang assumption is all the inventories will be sold on the current year, no? So kung hindi nasabi, pero dito naman kasi sinabi na, no? So we're all sold by the end of calendar year. So therefore, this 500,000 will go to the cost of goods sold, no? So that's why it's 500,000. Kasi equipment, this is different, no? Magkano ba yung overstatement sa equipment na understatement sa equipment natin, no? Or machinery, 1 million, no? But there, to compute for the depreciation, sabi natin, meron tayong 4 years from the date of intercompany. 5 years from the date of business combination. So 1 million divide by 5 years, no? So that's 200,000. 200,000, ano yung related expense, no? With the machinery. It's the depreciation expense. So sabi natin, kung ang excess is understated, ayan na nakalagay, understated ang machinery, lagay ko ito machinery, ang impact niya sa expense would be understated din, no? Understated, ayan. So kinuha ko lang yung net, kung meron tayong 500 na overstated, 200 na understated, so result is 300 overstated, no? Kung meron kang overstated 300,000 sa expense, meron kang understated sa net income. Kung ang income mo is understated, ang kailangan natin gawin is we have to add this back. That's why pagdating dito sa amortization of expense, again, amortization of excess will have to be proportionate, no? Will have to be split proportionately, no? So 300,000 multiplied by 60%, that's 180,000. And then 300,000 multiplied by 40%, that's 120,000. So pansinin, no? With the use of this cheat sheet, mas madali natin na populate yung template natin, no? So all we have to do is, well, kailangan mo munang i-analyze syempre whether the excess is an overstated or an understated. Or understated. Kasi pag dito nagkamali ka, hindi na natin magagamit ng tama tong cheat sheet natin. No? Okay. Sige. Pag-usapan ngayon natin tong impairment loss. Impairment loss, sabi dyan, goodwill arising from business combination was impaired by 150,000 at the end of 2021. So kung merong impairment, we have to split this not proportionately, class, but based on the schedule. So we have to do pro rata. So magkano yung impairment loss? 150,000. 150,000 multiplied by 1,100,000 over 1,500,000 para lang makagawa ka ng pro rata o yung sharing. No? Pagdating naman kay controlling interest, that's 400,000 over 1,500,000. No? So that's 110,000 for um, controlling interest, and then 40,000 for the non-controlling interest. Class, tatandaan itong net income, this was split based on proportionate share. Also the amortization excess, but this one is split based on goodwill schedule. This is important at dito madalas nagkakamali ang mga estudyante. No? Okay. Intercompany dividends, nakalagay kasi diyan, no dividends were declared, no? Pero just the same, pag-usapan na lang din natin, no? Para at least this is, let's treat this as a culmination of what we have discussed in parts 1 to 3, no? So sabi natin, intercompany dividends, um, we have to deduct the intercompany dividends in the um, consolidated net income attributable to the parent. Kasi nga, imagine, ganito na lang, no? Ah, ako, ah, I own, sabi natin na 80%, ito na lang, pag-usapan na lang natin 'to, wag na tayo lumayo. Si PJE owns 60% of Butterfly. Ngayon si Butterfly, ah, nag-declare siya ng dividend. Of course, si PJE will get dividend, no? Imagine that dividend income is also part of the net income. Pasok na siya dun sa other income mo. And yet you're going to account for it, no? So para hindi ma-double pick up, you have to deduct it from the consolidated net income attributable to the parent. So kung meron man intercompany dividends dito, we have to deduct it here. Okay? So wala naman, okay na tayo. Now, this gain on acquisition, kailan ba nagkakaroon ng gain on business acquisition, no? So of course, balikan natin tong table natin dito. If the aggregate consideration is less than the fair value of the net asset, there is gain to be recognized, no? So but it's rare, no? Even the standards uh, look into those scenarios as rare, no? In fact, pag daw ganun yung nangyari, ang suggestion, no, the requirement of the standard is to reevaluate, i-check nyo maigi, tama ba yung fair value assigned to the identifiable net assets of the subsidiary. Ganun, no? So parang you have to double check it, you have to double check everything na talagang gain on business acquisition yan, no? At tandaan, gain on business acquisition is only available in year 1. I mean, on the year of the business acquisition. So pagdating ng year 2, wala na yan. Okay? And again, gain on acquisition is only attributable to the parent. Okay? Okay. Ito na ngayon yung bagong concept. Ito yung pag-uusapan ngayon natin, no? So sabi natin dyan, there's an unrealized gain on sale of downstream. Pero bago yan, pag-usapan muna natin, ano ba yung nangyari sa separate books ni PJE at saka ni Butterfly? Paano ko ba to papalitin? Yan. Sige. Ito muna ha. Ang sabi ng problem natin, on July 1, 2021, PJE Incorporated sold its machinery to Butterfly. No? So si PJE nagbenta kay Butterfly ng machine. Magkano ang benta niya? 5 million. Pero magkano na lang yung book value? 3 million. No? So, pansinin, no? Sa books ni PJE, separate books, no? Debit cash dun sa proceeds. Credit the book value of machinery. Shortcut na lang to, class, no? Pero in reality, you have to also book your accumulated depreciation and machinery, no? So, but in this case, kunin lang natin, machinery 3 million. And of course, yung difference will be gain on sale, no? So in fact, class, that's true, no? Pag puntahan natin yung separate P&L ni PJE, there's gain on loss on sale of machinery of 2 million. No? So nilagyan lang natin journal entry. Of course, on the side of the Butterfly company, syempre, nag-purchase siya ng machinery, di ba, initial recognition would be at cost, no? So, debit machinery, 5 million. Credit cash for 5 million. So, okay na tayo dapat dyan. Wala na tayo dapat problema dyan. Kung walang parent-subsidiary relationship. However, we have to compute for the uh, consolidated financial statement. No? So imagine, sa mata ng mga investors and users of financial statements, PJE and Butterfly is only one. Kasi nga, PJE technically owns Butterfly, no? Owns 60%. No? So we have to eliminate the gain on sale. No? So paano yan? Uh, of course, by way of um, the template. No? So we have unrealized gain on sale downstream. This is unrealized gain. And since this is downstream, it will be all attributable to the parent. No? Walang share si non-controlling interest since this is downstream. So again, no, downstream from parent. Parent is the selling affiliate. Papunta kay upstream. Sorry, papunta kay subsidiary. No? So that's why it's downstream. No? Okay. Now, along with that, meron tayong kailangan naman natin i-recognize yung depreciation, no? So imagine, no, sa books ni Butterfly, meron tayong 5 million na machinery. Pero pagdating sa consolidated, magkano lang yung value nung machinery? It's just 3 million yung carrying value. No? So the depreciation, of course, that's 5 million. Ilang taon ba? Uh, the machinery has an estimated useful life of 4 years. Tandaan class ha, it's July 1, 2021. No? So, uh, kung 4 years, that's 5 million. Hindi na siya gumana. 5 million over 4 years, multiply by 6 over 12. No? So, that's 625,000. Pagdating sa consolidated FS natin, uh, it should be 375,000 lang. No? So, therefore, there's overstatement, no, in depreciation, no. So we have also to account for that, no. So we call it realized gain on sale of sale downstream. That's 250,000. So kung napansin mo, in-eliminate na natin yung unrealized yung gain on sale, and at the same time we also account for the correct depreciation, no, uh, in the consolidated financial statement. No? So that's how important to understand the concept of downstream and upstream. Ha? So okay na tayo dito sa first part. Pag-usapan natin ngayon yung, hindi na siya gumana. Hindi na gumagana Excel ko. Ayun. Okay. Pag-usapan ngayon natin tong next portion. Sabi kasi dyan, on September 1, 2021, Butterfly Corporation sold a portion of its land with carrying value of 2 million to PJE. Sino nagbenta? Si Butterfly. Butterfly is the subsidiary. Kanino binenta? Kay PJE, kay parents. So meron tayong upstream. Kita mo? So, ano yung binenta? Land. O class ha, pag land, there's no depreciation. No? So I'm sure alam niyo na yan. No? Um, So kung yung land sa book ni PJE, bumili siya from Butterfly, so debit land, credit, cash. Pero sa books ni Butterfly, magkano yung na-receive niya? Proceeds, that's 1 million. Magkano ngayon yung book value or carrying value of the land? It's 2 million. So therefore, Butterfly will have to recognize loss on sale of land, no, for 1 million. In fact, when we go to the separate income statement of Butterfly, ayun, meron nga siyang na-recognize na loss. But again, during the uh, preparation of the consolidated financial statement, we have to eliminate the loss on sale. No? So paano natin gagawin yan? Again, no, this is already upstream. No? So meron tayong unrealized loss on sale upstream. We have to split it based on proportionate share. So paano yon? 1 million multiplied by 60%, that's for the parent, that's 600,000. At the same time, 1 million multiplied by 40%, so that's 400,000. No? So with that, uh, na-account na natin ngayon yung unrealized loss on sale for upstream. No? Ang basically class, ang concept lang naman talaga dito is kung nagbenta si parent kay subsidiary or si subsidiary kay parent, we have to eliminate that. Why? Kasi nga, di ka naman pwede magbenta sa sarili mo. No? So parang sa dividend naman, imagine the subsidiary declaring dividends, no? Pwede ba siyang magbayad ng dividend para sa sarili niya, no? So uh, you have to look into the consolidated financial statement as one entity. Hindi na siya PJE, hindi na siya butterfly lang. It's a combination of the two, kaya nga siya consolidated financial statement. But it doesn't necessarily follow na PJE plus butterfly is equals to consolidated financial statement. It doesn't work like that. There are elimination entries that we have to prepare outside of the books of PJE, outside of the books of butterfly, in order for us to come up with the consolidated financial statements. No? In fact, para at least mas maintindihan natin yan, ano ba yung mga entries that we have to uh, prepare, no, as part of the working paper entries, no, itong WPE, that's working paper entries during the date of acquisition, no? So isa-isay natin yan, ha? So una, remember, we have understatement in the machinery, di ba, class? Meron tayong understatement in the machinery, and at the same time, overstatement in the inventory. Of course, we have to post journal entries for that, no? So debit machinery, 1 million. Credit inventory, 500,000. And we have to split them based on the uh, proportionate share. So credit investment in subsidiary, 300,000. Non-controlling interest, 200,000. No? So pansinin mo, class, ito yung entry natin in relation to the adjustment, no, to the fair value. Okay? So that's entry number one. Again, class, this is only just a review kasi we have discussed this in detail during the part one. No? And of course, next entry will be to eliminate the equity of the non-controlling interest, and then subsequently move it to non-controlling interest. No? So ito yung share capital, share premium, and retained earnings ni subsidiary. In fact, just go to the uh, uh, ayan, 12 million share capital, 1 million share premium, and retained earnings of uh, 5 million to 3 million. Tama ba? 16 million. Oh, sorry, mali ako. Hindi ko dapat siyang tinitignan. Ang tinitingnan ko is ito, nasa taas. Kasi date of acquisition, this is already December 31, 2021. I'm sorry for the confusion. So that's 12 million, 1 million, and 3 million. No? So this is date of acquisition. No? So this is January 1, 2021. Okay? So of course, we have to split this again based on the uh, proportionate share. No? So investment in subsidiary, um, debit, a credit, no, for 60%, and then non-controlling interest. Okay, oops, sorry. Okay, this is date of acquisition, class, ha? And of course, di ba sabi natin meron tayong goodwill. No? So how are we going to account for the goodwill? So it's debit goodwill for 1,500,000. Ito yung na-compute natin kanina. Credit investment in subsidiary, 1,100,000, and credit non-controlling interest for 400,000. Again, class, ulitin ko, we should split the goodwill based on the goodwill schedule. So meaning based on this schedule. No? Ito. Do not use the proportionate share. Magkakamali ka. Okay? Sige. Uh, that's the entries, no, on the date of acquisition. Now, what are the entries on the date of parang mali yata ang color coding ko. Dapat yata this is blue. Ayan. Okay. So, meron tayong mga entries naman subsequent to the date of acquisition. No? So, uh, debit dividend income, credit non-controlling interest, credit retained earnings. Pero pansinin, sa problem, sabi dyan, no dividends were declared. No? So, I just place it here para at least ma-recall mo lang, no, how dividend, no, will be accounted for. No? So, in this case, wala naman tayong dividends, so okay lang. No? Okay, number 5, entry number 5, ito na yung pag-account natin dito sa portion ng amortization of excess, no? So, sabi natin, inventory, debit inventory for 500,000. Ito na yung ina-expense na natin, no? So, of course, the related expense will be 500,000 for COGS, no? And then depreciation expense, na identify naman natin yan, that's 200,000. And then credit machinery or accumulated depreciation, no, for 200,000 because of the understatement. Entry number 6 on the impairment, no? So debit impairment loss 150,000, credit goodwill. Again, this is given naman, no? So nakalagay diyan, yan. Uh, Goodwill arising from business combination was impaired by 150,000 at the end of the year. And finally, ito yung topic natin for today. What are the working paper entries on the intercompany sale of fixed assets? No? So number 1 or entry number 7, meron tayo dyan, we have to eliminate the gain. No? So debit gain on sale of 2 million, credit machinery. So saan galing tong entry na to? Basically, itong pinag-usapan natin kanina. No? So that's 2 million. So binenta ni PJE kay Butterfly with the book value of 3 million lang, binenta niya ng 5 million. So, nag-recognize siya ng gain. Sabi natin, on the consolidated financial statement, we have to eliminate that. So, okay na tayo dyan. Kaya naka-debit gain, credit machinery. So, na-eliminate natin yung gain sa books. At the same time, na-correct natin yung value ng machinery. No? Okay. What about the depreciation? No? So debit machinery, 250,000. Credit depreciation expense of 250,000. Kasi remember, dito pa rin sa calculation natin, uh, the depreciation, no, calculated was already in the 5 million. But remember, it should be 3 million lang. No? So yung carrying value lang. No? Ini-eliminate natin yung gain recognized in the sale of the machinery. No? So therefore, we also have to adjust the depreciation expense. O bakit naka-credit ang depreciation expense? Tandaan, since the depreciation expense was calculated based on the 5 million, so depreciation expense is overstated. Kailangan lang natin bawasan. Okay? Bawasan by how much? By 250,000. Kasi nga, ang should be 375,000 lang. Next, land and loss on sale. No? So remember si Butterfly, nagbenta kay PJE. Magkano yung value ng land sa libro niya? 2 million. Magkano binenta niya? 1 million. So Butterfly recognized loss on sale. Of course, we have to eliminate that. No? So debit land, credit loss on sale. No? So with this entry, naalis na natin yung uh, loss on sale. No? Na-eliminate natin yan. Okay? Next, we have ito naman is actually not related to the intercompany sale but to transfer, no, yung net consolidated net income attributable to the non-controlling interest. No? So debit non-controlling interest net income, credit non-controlling interest. Bayin ko tong kulay para at least hindi ka malito na this is not related to the intercompany sale of fixed asset. Okay, so those are the relevant entries o questions. Saan ba makikita itong mga working paper entries? Is it included in the books of PJE? No. The answer is no, no? Is it included in the books of Butterfly? The answer is no. Working paper entries are entries outside of the separate books of PJE and Butterfly, outside of the separate books of parent and the subsidiary. These are only made, no, in order for us to come up with the consolidated financial statement. Okay? So with that, we can now compute or we can now um, uh, solve, no, for requirement number 1. So requirement number 1, ang tinatanong lang naman is consolidated net income. So kunin lang natin yung sum ng dalawa. So 6,120,000 for the parent, 1,280,000 for the non-controlling interest. No? So that would be 7,400,000. So the answer is letter C. Okay. Next, number 2. Number 2, ang tinatanong naman sa atin is, kunin ko siya ulit. How much is the carrying value of machinery in the consolidated financial statement position as of December 31, 2021? We have the book value of the parent for, ito template ulit siya, no? Book value of the parent for 14 million. Tingnan ko lang yung machinery. Ayun, 14 million. Book value of the subsidiary, 5 million. And then of course, we have to account for the working paper entries, no? So entry number 1, may machinery ba? Ayun, meron. 1 million. Entry number 2, wala. Entry number 3, wala. Pagdating sa entry number 4, wala pa rin. Number 5, wala. Number 5, meron pala. Ayun, machinery, credit 200,000. Number 6, wala. Entry number 7, yes, there is machinery. And then entry number 8, 250,000. No? So 7, 2 million, and then 250,000. No? So total machinery's carrying value in the consolidated financial statement would be 18,050,000. This is letter B. Okay? Tuloy muna natin yung requirement number 3. Requirement number 3, ang tinatanong naman is depreciation expense. Pero tandaan, in the consolidated financial statement. No? So depreciation ni P, 4 million given. Depreciation ni Butterfly, 600,000. And of course, we have to account for the depreciation expense based on the working paper entries. No? So number 1, wala. Number 2, wala. Depreciation na hinahanap natin. No? Number 4, wala. Number 5, ito. 200,000. Number 6, wala. 7, 8. Ayun, 250,000. So, 200,000 tsaka 250,000. So the answer is 4,550,000 or letter A. Okay, actually, we have completed no yung mga requirements no, but just the same, tingnan natin yung statement of financial position, consolidated statement of financial position para lang at least kompleto na yung understanding natin. So sa consolidated statement of financial position, kunin lang muna natin yung total no. So cash. So that's 10 million plus 1 million. Receivable, 1,500,000 plus 2 million. Investment in subsidiary, meron tayong 11 million dyan. But we have to account for the working paper entries. No? So meron kang credit na 300,000, credit na 9,600,000, and then credit na 1,100,000. So effectively, your investment in subsidiary is 0. So tandaan to class ha. Actually, pinakita ko lang naman talaga dito that the investment in subsidiary is 0. But ultimately, in the consolidated financial statement, talagang 0 yan. Imagine kasi, no? Hindi ka naman mag invest sa sarili mo at i-record mo pa yun. No? So, therefore, investment in subsidiary here will be 0. And then, of course, the inventory. Inventory, that's 5,500,000 kay parent plus 3 million kay subsidiary plus minus yung working paper entry. No? So, meron tayong sa overstatement of 500,000 and at the same time, yung uh, release to cost of goods sold. No? So, that's 500,000. Okay, so total is 8,500,000. Next, machinery. So sa machinery natin, na-compute naman natin. No? So that's 18,050,000. Okay, so kung tama yung calculation natin dyan, so dapat tumama rin yung statement of financial position natin. Land. Magkano yung land? That's, tingnan natin, land, 20 million plus 10 million, 30 million plus yung 1 million na working paper entry natin, no, in terms of the loss. No? So, in debit 1 million. Then finally, building. Meron tayong building, how much? 20 million plus 7 million. So, 27 million. Goodwill, ito, wag kakalimutan. Kailangan natin i-recognize yung goodwill. Magkano yan initially? Goodwill was initially 1,500,000, no? Pero nagkaroon ng impairment na 150,000. So total would be 1,350,000. Pati yung total assets natin. Ba yan? Punta natin yung other side. We have liabilities and the equity. No? So liabilities muna, 54 million. So that's 44 plus 10 million. No? 44 kay parent, 10 million kay subsidiary. So that's 54 million. Next, share capital. So share capital, we have 21 million plus 12 million. But remember, we have eliminated the butterflies share capital. No? So, yan. So, technically, ang maiiwan lang dapat dito is yung kay parent. No? So, we have 21 million and then ganun din kay share premium. Kay retained earnings naman, ito medyo tricky kasi kay retained earnings, you have to add the two, yung 12 million plus 12 million plus 5 million. But at the same time, you have to account for all your working paper entries, no, which has an impact on your retained earnings. No? So for example, ito, 3 million, and at the same time, all expenses, no, that will have an impact to your retained earnings. No? So depreciation expense, your COGS, the impairment loss, gain on sale, depreciation expense, loss on sale, and then the non-controlling interest share in the net income. Okay. And then finally, the non-controlling interest. Remember class, no? The non-controlling interest, this represent what? Yung 40%, no? 40% owned by other parties. Kasi nga, ang ownership lang naman ni PJE is 60%. No? So, paano natin mako-compute yan? Let's go to the working paper entries. No? So, credit 200,000 plus 6,400,000 plus 400,000. Basically, all the uh, working paper entries natin. So, which will impact the non-controlling interest. Ito sana meron, kaso wala naman tayong dividend declaration, pero just the same, sinama natin siya. No? And of course, credit na non-controlling interest for 1,280,000 representing the share. No? Ito yan class, share in the net income, no? Of the non-controlling interest. No? So, pansinin natin, the total, no? It's the same. No? So, 100,400,000. So, okay na tayo sa consolidated statement of financial position. Actually, class, this is just another way to compute for the net income. But pansinin, the 7.4 million, oops, lagi lang nagkakamali dyan. The 7.4 million, this is actually the same with the calculation that we have earlier, no? 7.4 million. So it's the same. This is just another way to compute for the consolidated statement of profit and loss. No? Sige. So we have sales. That's 12 million plus 5 million. Cost of sales, that's 3 million plus 1 million. Of course, the working paper entry related to COGS. No? So meron tayo dyan 500,000 minus. Gross profit, so 17 million less 3.5, that's 13.5 million. Depreciation expense, eto na-compute naman natin kanina, that's 4,550,000. Other expenses, we have 1 million plus 400,000 or 1.4 million. Pansinin, gain on sale of machinery, 2 million. Pero remember, we have eliminated that. no? So, part of the working paper entry natin, yung gain on sale was already eliminated. Also, at the same time, meron tayo dyan loss on sale of how much? 1 million, but that was also eliminated. No? So, 1 million less 1 million, so 0. And finally, the impairment loss of 150,000. So, get the total. So, that's 7.4 million. Again, this is just another way to compute for your consolidated net income. This is the same dito sa template natin. No? So, which is good. No? At least we're able to uh, present you two ways to calculate your consolidated net income. No? But I highly suggest that you use this one. No? Kasi this one, uh, uh, will guide you no on how to split no kasi there will be times na ang papakompute sa atin is the consolidated net income attributable to the parent no so at least it's available, it's 6,120,000. What if the problem asks to compute for the non-controlling interest attributable to the uh, net income attributable to the non-controlling interest or the 40%, it's 1,280,000. Consolidated is you just have to add it. No? So 6,120,000 plus 1,280,000 or 7,400,000. 7,400,000. So that's problem number one on the consolidated financial statement, including or involving intercompany sale of fixed asset. Actually, that ends the discussion on this consolidation, uh, intercompany sale of fixed asset. Now, again, if you have any questions, you can shoot me an email on my personal email address flash on your screen. Okay, so
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!